Industrials this morning. Long-term investors have been rewarded, though. The stock is still up nearly 40% just in the last year. Pretty good-looking chart over there. That kind of long-term thinking is what my next guest says is most important for investors. Joining me right now is Merrill Lynch Wealth Management Head, John Thiel. John, it's great to have you on the program.
Thank you, Maria.
Overall, wealth management, $2.2 trillion in assets under management, and then just in the wealth management is what, $600 million?
Yeah, just in our assets under management, fee-based assets under management, we have $2.1 trillion of our clients' assets we care for, and $600 billion of that's managed.
Right. How do you communicate that story when you have all of that money that you're overseeing for clients? How do you communicate a long-term story for those folks to ensure that you're not seeing this trading activity day in, day out, like knee-jerk reactions? Yeah,
it's really important to start with what they want to accomplish with their money. If we start with the idea that Apple sold $47 million phones but is down 6%, that's probably a difficult conversation. But if we talk about what it is they're trying to accomplish, their retirement, college education, whatever it might be, and then tie their investment results back to that long-term plan, recognizing that Apple, that company, is doing very well over the long term. So we got to connect the long-term results with the fact that their goal for their money is longer term. It's not short term. They're not going to need the money at the end of today. And so you've got to have that conversation with them to connect it back to what it is they're trying to accomplish with their money.
And I want to ask you about that, how you really communicate that, because I know you have a new ad campaign. I see that you tweet out a lot and speak to clients, asking them, are you ready for retirement? How do you look at things over the long term? So I'm going to get to that in a moment. First, give me your sense of the backdrop today for the economy and the backdrop for investing, because here we are looking at some of the earnings this morning. I know it's a joke to say 47.5 million iPhones sold wasn't enough. And I know that it's mixed because you have technology under pressure, but other companies like Boeing and Coca-Cola actually beat analyst expectations.
That's right.
Characterize what we're seeing.
So we think the economy is moving along. It's not growing fast, but it's growing. And importantly, it's growing, we think, in a sustainable way. And I think when you look at Coke and Boeing, you see an example of that. And so when we think about the constructive nature of the economy and the value long-term that's being built in stocks in this country, that as an investor, that's a positive environment. You can look at valuations and say, they're higher than they have been, but it's relative to everything else. So we still think U.S. equities are a good place to be, Europe and Japan as well. But again, in the context of a long-term plan, that those are the places where you should spend most of your time as an investor.
What is long-term?
It's usually 5 or 10 years. I mean, again, that's going to depend. Is it retirement goal? Are you 45 or are you 60? And by the way, if you're 60, retirement is probably 30 years long or 28 years long, not 5.
Right. The whole idea of longevity has really come into play when it relates to your money, because bottom line, we're living longer. We're getting ahead of disease. Will you have your money as you get older and perhaps change jobs?
Yeah. So it's interesting, the Alzheimer's Association's having their international convention down in Washington, D.C. right now. And the fact of the matter is that's really becoming one of the big risks of longevity. So the good news is we're living longer. That's great.
Yeah.
The challenge is we may not have provided for that financially. And then to exacerbate that situation is that if we're going to have medical conditions that are going to require a lot of healthcare costs, that even makes the problem worse. So today in the papers, we had a study where women are actually doing much worse with Alzheimer's. They're progressing, the disease is progressing much faster.
Wow.
But the key was that the healthcare cost of current 5.3 million Alzheimer's patients is $226 billion. That wasn't contemplated 10 years ago when we were doing retirement and longevity planning for clients.
That's a really good point. So what do you do in terms of putting a plan together? And you say, 45, 60. If you are 60, have you missed it? If you don't have the right number in terms of how much you have saved for retirement, how do you get started now?
Well, it absolutely is understanding. If you don't understand where you are, I think that's a pretty dangerous situation. So it's really sitting down with an advisor and understanding what you have, what you would like to do, and then just really work out the math to see how that is. And then there are things you can do. You can work longer. You can save more. You can think about a second act in retirement, maybe perhaps part-time jobs. But there's options and ways to go about that. But if you don't have that real conversation with someone, then I think you're setting yourself up for some hard times.
If you don't know where you're going, you're, of course, are not going to know how to get there.
No.
Yeah. Why is it that people are so underinvested when it comes to retirement? Was this just not a priority for so many years for so many people?
Well, if you think about it, and we change slowly as people. 20 years ago, 30 years ago, corporate America was taking care of the retired population through the form of a defined benefit pension plan. In the 80s and 90s, even today, that's really become less and less of a situation as we've shifted from defined benefit to a defined contribution, the 401k plan. So we're responsible for saving for ourselves. That's a new habit that many people have to start, and they haven't started that. And so that's really what we try to promote.
I know it depends on where you are in terms of how much risk you want to take on or, your age. But give me your sense of allocating capital, U.S., Europe, and Japan. You all said, we've got Greece sort of confusing some of the headlines there. You still think the European region is a good place for people's money long term?
So we think that, we favor the U.S., but from a valuation standpoint, our research team thinks that Europe, the developed markets, Europe and Japan, have opportunities as well, based on valuations, and they're constructive on both those economies long term. Obviously, the emerging markets are important in the long term, but right now there's a lot of things going on there that would, that perhaps people wouldn't want to allocate as much to now.
Give me your most important theme that you are communicating with investors today in your new ad campaign, and the way you're communicating differently.
Yeah, that it's a different world out there. That the way that we've always thought about financial assets and planning is different. It isn't just about beating a benchmark. It is about working with someone to try to take the money you have, invest it prudently to accomplish your goals or mitigate your concerns. So whether that's retirement or funding your lifestyle for a long period of time, that's the fundamental difference. Yes, it's important to perform, but it's important to perform in the context of what you need it to do for you.
Great advice. John, it's good to have you on the program today.
Maria.
Thank you so much for joining us. John Thiel, head of Merrill Lynch Asset Management, $2.1 trillion in assets under management, $600 billion in that division. Stay with us.